You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live every Friday at 1:30 p.m. Central, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by QuickStrike, options pricing and analysis software. QuickStrike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. QuickStrike has you covered with market data reports ranging from open interest to the term structure of volatility. QuickStrike is the perfect addition to your trading toolkit. Learn more about QuickStrike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1. This Week in Futures Options is also brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody, welcome back to TWIFO, This Week in Futures Options. You know, if you guys are joining us live, you're listening to that little bit of a replay of the option block from yesterday. It feels so much better to be standing here in a dry studio. I was doing that show, most of that show yesterday in a puddle, spilled water everywhere. So it's nice to be doing it in the dry clothes and dry everything else. And everything mostly survived. Computer seems to be working. All the production, audio, streaming stuff still seems to be working. So we dodged a bullet with that one. Don't worry, I got a sippy cup here today, listeners, so I don't repeat yesterday's mistake. My name is Mark Longo, of course, from the OptionsInsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. If that sounds fun to you, shows like that where we spill water everywhere, and maybe we also talk a lot of volatility and trade wars and fun and everything else and some strategy and everything else, all sorts of good stuff. Check out the main network. It's got all the shows there. We just played a little Options Playbook, a little bit of Option Block. Got a lot of shows on the network. No matter what your interest is, chances are we got something there for you guys. Check out. I put up a new Trading Tech Talk recently. Pretty interesting stuff going on there as well. So no matter which area of the markets you're interested in, chances are we got something for you on the old network. And of course, for those of you who like your info immediate, you can join us 1:30 p.m. Central, 2:30 p.m. Eastern via Mixlr, MIXLR. You've seen that link. We tweet it out all the time, especially when shows are on. So if you follow us on any of the old platforms or go to our site at all, you've seen the link. Grab it once, set it and forget it. And you too can know when we go live throughout the week with all of our shows, which is always kind of fun. You can always hit us up live with questions, comments. We do like to hear from you guys. And joining me on the old TWIFO program today, the yin to my yang, the dark side to my futures options, light side. He's more of the Kylo Ren to my, let's say Yoda. I'm not really a big Rey guy, so let's go Yoda. Mr. Nick Howard, the founder of Bantix Technologies and the creator of a little platform we like to use around here quite a bit, especially for this show, called TWIFO. Mr. Nick, welcome back to TWIFO, sir. How are you doing?
Hey, what's going on? Doing okay.
You like that? You like the Kylo Ren reference, or do you prefer a Vader?
No, I told you I hate Star Wars, so I don't like those references at
all.
Oh,
that's true. That's true.
Harry Potter guy, right?
All right, what's the Voldemort? How's Voldemort? Right? How's that go?
Yeah, that's much better. Star Wars is dumb. I hope I don't lose any people listening. I've never gotten it.
People are tuning out as we speak. What about Snape? Is he a bad guy in the Harry Potter thing?
No, he's a perceived bad guy, but he actually ends up being a great help to the situation.
Oh, interesting. Spoiler alerts for me. I have only read the first book, so there we go. more ahead. But a lot of good stuff for us to get to. Mr. Nick, should be a fun show today. I'm not sure if you noticed, Mr. Nick, but things have been happening since the last time you and I gathered together. It was a relatively quiet start to like midpoint of the week. Then I guess some people decided, there's not enough vol, not enough action, not enough concern out there in the broad marketplace. Let's ratchet things up. Let's turn it up to 11 with a little bit of talk of some trade wars. And so we've been seeing the fallout over that of the last few sessions. Of course, the S&P, most of the major indices, selling off pretty hard yesterday. Coming into today's session, of course, we are streaming this live on Friday, the 2nd of March. Hard to believe we're into March already, but say la vie, 2nd of March here, a little bit, like I said, 1:30 p.m. Central here, and most of the major markets were selling off pretty aggressively. Then they kind of got a lot of it back. So already this morning into the early session, we've lived several sessions of worth of activity in one, so it has been fun. So we thought, what better place to start with you guys this week than out there in the S&P. We know you guys have lots of different flavors of how you like to sling S&P. A lot of you like SPY, some might SPX. Spoiler alert, pretty much from a vol and skew perspective, they're all kind of the same, so we're going to break down the Emini here. You guys can pick your product of choice and apply as you see fit. By the way, you guys can follow along with everything Nick and I are doing here. Get a free kick at the old tires there with cmegroup.com/TWIFO, TWIFO. That allows you to access to Quick Strike to see everything Nick and I are talking about this week, the TWIFO reports. They break down all the cool stuff that we're going to talk about right now. So see it for yourself. If you're listening after the fact on the podcast, make sure you change those expirations and settings there so you can see it. Change it to today so you can see exactly what Nick and I are looking at. And as we're finishing off the week here, spoiler alert, indexes are down from where they were last week. We're off about 80 handles here in the E-mini S&P to round out the week. That's shy of 3%, about 2.8% here or so. And as we all know, vol has been, shall we say, explosive over the past, kind of coming off a little bit now. We saw the peaks of that coming into yesterday when the sell-off was at its most extreme. And then a little bit this morning when, it seemed like we were having a repeat of yesterday. Now we're kind of dialing that back a little bit. So the vol coming off, but still net up many, many handles. Pretty much pick your month, pick your product, pick your strike. And the vol is up many points from where it was this time last week when it seems like we had maybe at least turned a corner. The correction had pretty much been wiped out, whatever there was of the correction. We were back threatening or setting all-time highs. It seems like all was right with the world, at least for the bulls. Then, like I mentioned this week, turning that knife a little bit, ratcheting things up a little bit. In terms of what really caught our eye out here, looking again at E-mini, S&P, cmegroup.com/TWIFO to follow along for yourself. If you're saying to yourself, what was the most active thing out there? What's the big option, the number one with the bullet strike action activity out here in the E-mini this week? First off, you probably got to look to the weeklies. That's where the action usually is out here in the S&P. Even though actually this week It actually looks like it's just a straight up March contract, which is in many ways like a weekly, but it's a straight up March that led the charge this week. And actually, I'm going to move out a little bit this because there's another strike that actually did a little bit more, and it is indeed in the weeklies. It's looks like was this the week March. This is March, 27 days out, expiring on the 29th. So the 29th weekly contract, lighting it up. And you're saying to yourself, so probably had some puts lighting it up this week. The Emini settling out right now as we're talking here, right around 26.70 or so. And if we said, a little bit of near downside puts wouldn't be the worst thing, you probably were right. And indeed you were out here, number one with a bullet, 59,000 and change going up, including about the lion's share going up 26,000 actually today. Actually, this is the end of month contract. You're right, Nick. This is the end of month contract, which is, we don't get to talk about those that's often on the show, which is kind of interesting in and of itself here. 26,000 going up today, 27,000 the lion's share going up on Monday, a whopping 87 on Monday. So a lot changing throughout the latter portion of the week. Of that nearly 60,000 contracts, about 24, almost 25,000 net opening on the week. So a big action in near-term downside, even though they were in the money not too long ago, even today, puts. So keep that in mind as we're looking at all of these crazy strikes. That's one thing about looking at the E-mini, Nick, is that, you kind of got to jump around for all sorts of, all the months and strikes are, especially in that front portion of the curve, are pretty active, particularly when you get to the weeklies. Then we get a little bit farther out. We get down to the 2,500 puts, also in that same contract, for 52,000 total contracts, 27, almost 28,000 going up on Tuesday, 15,000 today. Total of, I said 52,000 net closing actually on the week, about 16,000. Maybe some people taking advantage of the dip there to take some of that off the table today. We shall see as we dig on a little bit more here. Also seeing a lot of action. Let's jump around a little bit again. 2,600 strike, Mr. Nick, seems to be where the action was at least when it comes to puts out here. Now the standard March contract also lighting it up to the tune of the 2,600 puts, doing 52, almost 53,000 contracts. The lion's share coming on Thursday, almost 16,000 going up there, followed by today, 12,000 going up. Net only 4,000 openings, so a lot of churning and burning on this strike this week. Again, not surprising. We've been dancing around that strike quite a bit, particularly over the last few sessions, so not surprising that these would be leading the charge. I'm looking across here, Mr. Nick. Again, you guys can do this yourself, cmegroup.com/TWIFO, and look for some of the aberrant strikes that are leaping out at me. Let's go a little bit farther. Oh, the 3,000s saw a little bit of action this week. Mr. Nick, 3,000s doing a little bit shy of 1,000, about 800 going up pretty steady. 288 yesterday, 289 today, and a little bit less throughout the rest of the week. So a little bit shy of 1,000. So if you're saying this is not bullish enough for my taste, 3,000 strike calls doing some weird action. Mr. Nick, there's a lot of weird stuff going up out here this week, but I don't want to get lost in the weeds. We got other products we got to get to. So, Mr. Nick, what a lot of crazy stuff going on this week. What was catching your eye? I know we talked about it before the first big sell-off earlier this month, and we kind of, people are looking to us on the show to see what happened with the skew, and especially with the quick skew, as we like to do here every week. And, it was kind of surprising a lot of people that the skew didn't perhaps change as much as they might have expected given all the activity. So what caught your eye out here this week, Nick, from a volatility and perhaps more importantly from a skew perspective out here in the E-mini?
Yeah, so it's pretty much the same stuff that we've been talking about in terms of not much of a change. Again, we're looking at the short-dated stuff. There's so many short-dated things, like a majority of the contracts are under 30 days to expiration. So we're not going to see this. We can see the same kind of activity in the skew, but remember there's less strikes as you go towards expiration that could make up that skew, so you have a little bit less dispersion from the at-the-money. But as I look at what I wanted to do while you were talking, I was looking to see how far, how many strikes we actually do get when we are looking at like a 7-day option and how far down we go. For instance, in the EW2H8, which is the Wednesday weekly, I believe, expires in 7 days. Actually, that's EW2 is the next Friday's contract, expiring on March 9th. it has the 25 delta is only about 50 points away. So you have about a 100-point range up and down on a 7-day contract to get from 5 delta to 5 delta, which is a pretty good range. But we've also seen those kind of ranges, not necessarily in a given day, but we've seen those kind of ranges over the course of the week. So I think that even though we don't see much from a quick skew change further out on the curve, we are seeing a little bit of a quick skew change in these less than a couple week contracts, but again, not so much. So my takeaway from this is that as much as the market was down with the tariff comments and then whatever happened on the heels of this morning, I think it was early 4 o'clock. We saw a big break in the futures as well. It doesn't seem to have the same. It didn't strike the same kind of terror that we saw in the initial break. So whether people were better prepared for a break, or whether yesterday most people, because vol did nothing. It's actually in a little bit today, and again, we probably saw a little bit of a pop intraday, and I can verify that. But overall for the day, in comparison, we don't have that much of a change. And let's see if we had a pop this intraday. We had a little bit of a pop, and then we came back off. So yeah, there was a little bit of fear this morning when we came in before the open. A lot of that break was, so that's going to strike people a little bit nervous, I'm sure, when they got up, or if people were up watching. There was a lot of buying to cover in case that was going to continue forward throughout the day. But overall, I don't think it did much in the end. And again, like we say, as people get used to these breaks, as people get used to these sort of surprises, and if they're better set up, we're not going to see the same sort of. I'm just judging it based on just from the noise in the market. I mean, we saw vol get bid this week with the moves down, but it just didn't have the same feel as it did the last time. Probably because the one was more of a surprise. This one now, something stupid can be said every other day, and I think the market's going to just be prepared. So maybe we're going to start to see a little less reaction going forward. But I would imagine that we could see a move with the same magnitude back up if somebody backs off some of the comments that they made early on about the tariffs. So not much change from a skew standpoint. Still pretty firmly bid to the downside. Not tremendously different than it has been. So outside of the vol getting bid, we did on the break. We're gonna move up the vol curve as well. So there was some movement up the vol curve for the change in at the money volatility, and also some increase in the overall volatility. So I'll have to take a look at that as you're talking about some other stuff to see, how much we got on the slide up the vol curve versus how much we got in the actual increase in volatility in the market.
It's kind of funny. Everyone's kind of saying the same, similar refrain to what you just said, Nick, on the network this week, is that, it doesn't feel like it did at the beginning of this month. Maybe because we just saw it a few weeks ago, so we're kind of a little bit, maybe inured to that, the terror of the sell-off. Also, of course, beginning of the month was a little bit more unexpected. This one, so this rhetoric has been kind of going on for a little bit. So maybe the actual act of it happening took people by surprise, but this is not completely unanticipated event. And also, last time we were coming on the heels of this extended, protracted bull market that seemed like it had no end in sight, and the volatility had nowhere to go but down. And so to seeing those two trends reverse themselves so abruptly, that took a lot of people by surprise, as we saw particularly in the volatility space, where so many of them got wiped out as a result. You're right. This time around, whether it's just because we just saw it, so it's recent in our memories, we all know the market has a very short-term memory, or whether it's the fact that this kind of combination of everything you were just saying, it does seem like it's a little bit more muted than last time, which could potentially be a good thing, or if you were banking on a crazy return of volatility. We saw a lot, obviously, but nowhere near what we saw last time. Maybe it's a bad thing. I guess it depends which side of the coin you're looking at. I'm sure you guys have questions. Hit us up about all things index vol. I probably could do a whole show on it, but other products were lighting it up over there on the old CME Group platform this week as well, including all things black gold, Texas tea. A lot of you guys like your crude, so we got to make sure we squeeze it in there every week. Been kind of a rough week for all things crude. Net so far finishing off the week off about 2.5 handles from where it was last week. Talking WTI, of course, listeners, right around the 61 handle out there. So yeah, it's been all your crude bulls had a nice little run. Now retreating a little bit. This is the, of course, with February coming to a close. That was the end of the monthly streak. It was a 5-month streak of gains out there in WTI. It ended up down nearly 5% for February. So all you crude bulls, you know it had to come to an end sometime, at least take a little bit of a hiatus, a little bit of a break. It's kind of what we're seeing right now. We're actually yesterday coming into our lowest levels, and today in about a couple of weeks. Again, a lot of that coming on the heels of data showing U.S. supply and production going along pretty well. Also, pretty strong climb in gas stockpiles out there. All that combining to, as we said, it's always a dance between what's going on with OPEC and what's going on with U.S. domestic production. We're seeing a lot of talk now that U.S. is going to be the biggest producer in the world, probably a lot sooner than people thought, maybe as soon as in a couple of years or so. We shall see, if not sooner. So a lot of that weighing on the price of crude this week. And of course, for all of you out there, maybe it's not such a bad story. We've been talking for a while about how crude vol was low enough, and we're seeing enough movement in the underlying that it's been paying the rent every week. Of course, rent is the old quick strike term over there for how much you got to pay to cover the movement. But in this case, it's actually working. You're getting paid a lot to do, or it's costing you not much, I should say, really. The flip side of that, to capture a lot of movement out here in crude. And of course, we saw vol come up again this week as well. So that's another story a lot of you have been looking for, who've been writing in, asking, hey, I want to buy premium in WTI. When are we going to see a nice little rebound? Saw it again this week. We've said it before. It usually takes a protracted sell-off period to really get the vol up there and keep it at a sustained level. Now, we'll see. If we keep at these levels next week or maybe continue to sell off, this vol will continue to go up. If we stay here, it'll probably trickle back north a little bit slowly. Then we're going to see that vol come in like it has pretty much every other time. We've seen these little brief pops, these brief blips out here in volatility. In terms of where we settled out, like I said, we settled out about 61. So if you're saying to yourself, what was the most active contract out here in crude this week? It was out here in April. By the way, open interest out here up a little bit shy of 4%, about 3.9%. So actually, in terms of opening OI positions, that's actually somewhat light. Usually we see on an active week 5+% out here in WTI. And a lot of the action, about 45%, coming in this front, or actually not the front, there's a weekly ahead of it, but the front month contract in terms of the April contract. Number one with the bullet, April 60 puts, doing 36,000 contracts, lighting it up this week with 11,000 going the lion's share coming in on yesterday, almost 10,000 going up on Wednesday, and about 6,000 on Tuesday, 5,200 today. Total, like I said, 36,000 and change. Actually, net only slightly closing, so a lot of back and forth on that 60 strike. No surprise, we've seen this before in WTI. A lot of people like to aggregate the liquidity around these even number strikes. When we vacillate around these things, a lot of back and forth action as a result. Hot on its heels, though, were the 57 puts. A little bit more bearish, a little bit more out of the money there, doing about 30,000 contracts, tied pretty much, very close to it, about 10, almost 11,000 on Thursday, and about 10,000 and change on Wednesday. Net about 4,000 in total contracts opening on the week. So a little bit new positioning going up on 57 strike, if slightly. Again, 30,000 total contracts going up out there. Then we drop down a little bit yet again. First call on our list, number 3 overall, the 65 calls out there in April, doing about 24,500 contracts. The lion's share on Thursday, 7,200, about 6,000 going up on Wednesday. Again, kind of slightly closing, about 800 contracts. So a lot of back and forth on that strike as well. 60, 65 strangle. People always ask us, where's that nice tight strangle where all the activity is in the front month or the front week? And 60, 65 are your strikes du jour out here in April this week. Then we got to roll out a little bit out to June, where we saw the June 60 puts. 60 is kind of your strike du jour this week. 23,000 of those, about almost 10,000 going up today. So today being the lion's share of the activity. Again, net slightly closing, but only a little bit, about 400 so contracts. So the action, still a lot of back and forth. 60 strikes are where it was this week. Mr. Nick, let's just do a quick scan here while you're getting your vol and skew analysis ready for any aberrant strikes. Dees 2019 We did see some 90 calls lighting it up this week to the tune of 3,000 going up on Monday and about 1,200 on Tuesday. So total about 4,200. Worth noting, it's actually closing. 1,700 of that was closing on Monday. So interesting net closing positioning on the 90 strike. So perhaps some little aggressive bulls decided this week's move and maybe the sell-off over February, all of that combining to say, yeah, maybe 90, a bit of a bridge too far. Let's dial back our exposure on that strike. Let's see, and there's some small 35 puts trading, not too much going up there. While I keep looking for some funky strikes, Mr. Nick, what caught your eye this week from a volatility and from a skew perspective out here in the Texas T, sir?
Yeah, so again, make the same mention as always, looking at the weeklies, not much volume going on in there. So I always want to pay attention to that and see if there's any changes on that front, given, the short-term activity. There was a 7-day option available, and that barely traded. And the April, which is a front contract, traded, that was the majority of the volume this week. From a skew standpoint, going into the week, it was pretty, the 25 delta, the puts were a little rich and the calls were a little cheap, but it wasn't that big of a deal in terms of the percentages. And this week, the puts got a little bit more expensive. But again, I'm going to, and I mentioned this before, I'm going to have to add something to the report here, because I think what I'm starting to, and maybe this is obvious to others, but what I think I'm starting to pay attention to, especially when you get into markets that have, put skew or call skew, and as we move back and forth within those ranges, some of those increases in volatilities, because people generally are tracking the at the money, sometimes those volatility changes might be misrepresentation of the actual increase in volatility in the market, right? Because if you go from one strike to another and you move up the vol curve, you could easily have an increase in volatility without much of a change in the curve or the overall position of the curve. So I think on one more column in the volatility section, which we'll add, we'll call it the strike vol, or we'll call it strike, and we'll see how much the actual volatility of that strike changed. So what that'll do is allow us to see if there was a parallel shift in the volatility curve for an overall change in the market versus just a move to a different strike on the same shaped curve. So, nothing. I think that is going to tell a lot about this teeter-totter back and forth on the quick skew. So from that, thinking about that without seeing numbers very specifically, I would imagine that there's really not much of a change in the way the curve looks, at least from what my little spot check that I did out on the April contract. So volatility up, but I'm going to say that probably 50% of that change in volatility comes from just a shift in strikes on the curve and a little bit of a bid in the volatility itself. And, if you look back, if you look and see how the market's moved over the last 3 to 6 months, we basically, when we broke 50, we were straight up to our 65, to the 65 dollar amount per barrel. So now we've trickled back off there. And if you look at least the April contract, I didn't look at the rolling, but there's not much protection below 60 there. So if we continue to see this softness, and I think you mentioned it, the part I don't think people expected there to be sort of this kind of drag on the prices this week. I thought, at least it was my sense that people thought we would kind of hang around where we were. So this 4% increase, a 4% decrease that we're looking at now that the market's closed or close to closed, I don't think that was expected. So, and then from a chart standpoint, and again, I'm not a technical guy, but just looking at it, if we get this little bit of a break to continue, there's not much help at the 60. Everybody likes the even numbered strike. There's not much help there. So it'll be something to watch next week to see if there's still weakness in the price and how far or how close we get to 60. And then if there's a lot of defending there, once we get to that point, I have the open interest. I haven't looked at that chart. Let me take a look and see what that looks like in terms of, that's got to be our highest put strike, and it is. So there'll be a lot of churning around 60, but then after that, probably got a couple more bucks on the downside. So we'll have to watch. 65 is going to be our barrier, I think, just based on open interest again. So that's probably not a big stretch to say something like that our price range is going to be between 60 and 65. But I think if we're soft next week and we can break that 60 strike, that we might have a buck or two of downside there. But from a volatility standpoint, nothing that tremendously interesting, other than the fact that I think that we need to do a little bit better job of looking at volatility in comparison to strike in at the money, and just how that curve shift to give people a little bit more insight in terms of what that particular market is doing.
Yeah, it has been, you're right, interesting to watch. I don't think a lot of people saw, maybe you're right, this little bit of retreat here. I know the bulls are pretty happy. At least they had been until the last few weeks, where we saw, a little bit of that bloom coming off the rose. They thought it might have been a momentary blip, at least going through this week, not so much. So we know your crude bulls are out there. We hear from you all the time. So better luck next week, perhaps, out there for all things crude. As we move on to another product that's getting a lot of interest, Mr. Nick's kind of one of the only products out there really exhibiting any kind of true inverse correlation these days. This is our old friend, the shiny stuff, gold. People had alleged that Bitcoin and crypto was going to fill that need. Not so much. Maybe we'll get to some Bitcoin in a little bit. But certainly not in the last big sell-off. We saw them moving pretty much in lockstep with the major markets. Not quite, exactly what you want from a hedge. This week, gold coming in, shedding a little bit off about 5 handles from where it was this time last week, right around 13.25. Looking at the vol out here, it's kind of a mixed bag nearer term, which is really mostly just gamma anyway, slightly up. The rest of the vol coming in a little bit out here, which is interesting because, we said before, and I think Erik said it again when he was on the show recently, gold vol, not exactly expensive. So every time it sheds anything, it makes it kind of interesting and or perhaps attractive from a paying the rent perspective, because that rent's getting so cheap. Looking out here in terms of where was the action, actually, overall OI was a strong week this week, about 7.6% increase. That's pretty hefty. And pretty much exactly 50%, 50.1% of all that volume this week coming in that April contract out here, so the front month contract. Weeklies out here, kind of like the crude, not getting a ton of love out here. All the action pretty much in that front month contract. Again, 50%. Number one with a bullet. We are flirting pretty close to a nice even number, 1300s. If you had to guess that, you would have been a winner. 1,300 puts getting the lion's share this week. About 10,000 contracts. Half of that almost coming on Thursday. About 4,700 contracts coming on Thursday. 3,200 on Tuesday. The rest kind of scattered throughout the week. Net about 1,300 contracts opening there. Then we fall off a wee bit to, just slightly though, to number 2, the 1,400 calls. So our strangle du jour this week in gold is the 1,400 strangle, all again here in April. About 9,000 contracts going up there. About, again, Thursday, the big day, 4,800 on Thursday. The rest of the week at 1,400, almost 1,500 today, and the rest of the week kind of even. About 1,500 net openings. So slightly opening both those strikes going in this week. Then we come off a little bit to the 1375 calls. The upside gold bugs will not be deterred. Doing about 7,700 contracts this week. The lion's share coming on Thursday, 22, almost 2,300. Followed hotly by Tuesday, about 2,100. And again, the rest kind of scattered throughout the week. Net 3,600 contracts opening there. So perhaps some folks taking advantage of a little bit of a pullback to reposition on the 1375 strike out there in gold. Number 4, the 1310 puts, 46, almost 4,700. The lion's share going up on Tuesday, 2,300 going up there. Kind of light today, only 300 contracts today. About 1,200 net opening throughout the week here on good old gold. Let's look here really quickly before I toss to Mr. Nick to see if he's got anything up his sleeve from a vol or from a skew perspective. We know we got surprised earlier this year or last year, I should say, with that crazy gold upside trade. Not seeing anything quite along those lines right now. We are seeing some love for the 17 quarters going up in July. Yes, a 1725 strike this week, listeners, trading nearly 1,000 times on Tuesday. A few more actually throughout the week, a little over about 1,023. Actually, net closing, 267 closing net on that strike for the 17 quarters in July. That's that's an intriguing strike, perhaps not one I would have initially assumed would be lighting it up out here this week. And there were a few 18 halves going up out here in Dees 2020 as well, about 22.75. All of that opening, all of them going up on Monday. So the 18 halves and 17 quarters for all of you out there who like your funky strikes. The Dees 2020 when it comes to the 18 halves. So a little bit longer term, perhaps a little bit more, shall we say, understandable out here. The others come in July. Mr. Nick, what caught your eye this week from a volatility and from a skew perspective out here in good old gold?
Well, I think what continues to be really interesting from my standpoint is, if you're looking at the report, and again, I left the report open all week again by mistake, so you had access to all the links and all the historical stuff that was out there that we keep out there. So I hope you're taking advantage of that. But I think is what's most interesting is we didn't see much of a change from a quick skew standpoint. We also didn't see much of a change from a overall futures price standpoint. But even if you do see some disparity in the richness or cheapness of the calls and the puts at the money, we're at such a low volatility here. You can get to the point where you're looking at something that, the 25 deltas might only be separated by a half of a vol. So as much as we might see some tilt, we're not seeing a great deal of tilt based on the fact that the volatility is so low. And that's going to obviously happen, right? The lower the vol, the lower the percentage is going to be in terms of the call or the put in comparison to the at the money. So I still think that it's obviously not flat, meaning that there's still a little bit of a bias on the call side, and we tend to see that in the gold, but nothing tremendously exciting in terms of change there. Other than that we saw a little bit of a pop in that, and now we're seeing that volatility come right off again. So I think, again, in these low volatility markets, I think these are the fun ones to watch more than the high volatility stuff, because the low vol we've seen to go lower, but these are going to give us the bang for the buck at some point that we really want to pay attention. So I think we want to pay attention to this market in particular, even though we didn't come off of our highs from too much. And the other thing that kind of caught my eye in the metals was silver seemed to get beat down pretty good from a price standpoint, just in comparison to where it's traded. So I felt like that had a little bit more of a depression than the gold did over those last as we started to come off of the highs here. I don't think silver followed up as high, but it definitely feels like it followed it down when we finally did see that break in the metals.
Get Uncle Mike back on to give us an update on how his long-term silver collar is treating him. Speaking of how things are treating us, you can't talk the metals without, a lot of people like to lump Bitcoin in with the metals for whatever reason, so I guess we have to here as well. Because I guess technically it's called a coin, right, Mr. Nick? So that means you can hold it in your hot little hand. It's a real coin, right? You can put it in your pocket. So Bitcoin, of course, like you mentioned, selling off a little bit today, pulling up the CME Bitcoin futures here. They're easy to find if you go to the CME homepage. It's all over the place. Bitcoin. So you can't really miss it. The front contract doing about 700 contracts. Remember, that's a 5 times contract, so about 5x that is what you actually got going up there. Selling off about a $1.65 right now out there in terms of 165 points, obviously. Right around 10,900. Pretty much all the action coming in that front contract. Only a handful in the April. So it's all March, which is kind of how we've seen these contracts play out so far. They're very, very near-term, near-focused contracts. So a lot of interest out there. I know, Mr. Nick, you've been tracking Bitcoin on your platform. You guys over there, QuickStrike, one of the few that actually has some cool data on this. You're actually starting to interpolate some options vols and some options skews for the hypothetical day, hopefully sometime soon when we actually have some options on these things. Anything catching your eye out here from a Bitcoin perspective this week?
Let's see. I'll take a look and see what we have. It's interesting. I'll have to take a look at that. I don't like the way that looks. I think what we're seeing is that as much as the market's moving, it's not really. We're not seeing these big swings in volatility like we did when we had the big run up. So, and we're seeing sort of a pretty flat volatility or long-term volatility in the Bitcoin, and moving more towards, like it started out in the beginning of February around 150, and we're moving back towards down like an actual volatility of around a little bit over 100. So we're not seeing, we're not seeing the tremendous swings that we're seeing, even though we're seeing pretty good percent moves in that market. So if we start to look here, the actual volatility right now for the Bitcoin's around 106%. And if we change the way we look at it, like we look at it we look at day change over, we look at the percent change day to day, and then we also look at percent changes over 60-minute intervals and over 15-minute intervals. And these 60 and 15-minute intervals actually have lower volatility than the day-over-day changes. So we're seeing the short-term volatility is not quite as crazy as it has been, and overall trend of the market itself seems to be moving down. So I guess that's probably good. So we move more towards a more stable price, which I think is not necessarily what everybody wants, but it's probably what makes it more useful as an actual way to use that cryptocurrency as a means of exchange. So, and it 10,000, this 10,000-ish area seems to be a really comfortable spot for it over the last however many. Let's take a look at this. We started around 10,000 we got 2 weeks ago. If we look at 4 weeks ago, so we traded down. Well, we traded down pretty hard to just below 6,000, but we spent more time around the 10,000 mark, I think, than we have spent around any other price point. So maybe we're starting to see a level in this market, but long-term trend is down for the volatility as far as I can tell.
Yeah, that has been a little bit of a trend. We saw a brief blip. I think a lot of people were putting out there. I think Bloomberg and a few others when the 10-day vol right after the big meltdown earlier this month, when the 10-day vol of VIX suddenly eclipsed Bitcoin and everything. I have a lot of stories were going on about that, but of course, as we all know, with volatility, it all comes back to the frame of reference. You can look at pretty much any time of date frame reference and try to get what you want out of it. So it's always a bit of a moving target. Interesting, right around that level of 106%. All of you guys asking us, what is the Bitcoin vol? There you go, at least for right now. It's going to change. Ask me again in 5 minutes. It'll be different. But for now, right around 106 for all of you out there. Speaking of things that are moving and shaking, what else was moving and shaking this week? The entire universe of products they sling over there at CME, it's quite a few. You can do your lumber, you can do your hogs, you can do your fluid milk. What was moving and shaking this week? On the upside, the top five, we got KC wheat up about 8.6%. Again, these are just the underlying futures. We're not getting into the options or the volume or anything else like that. Just straight up underlying, making everybody's life simple. Number two, the wheat itself, 6.5%. Number three, soybean meal, 3.5%. Number four, corn, doing about 2.5%. And then round up top five, oats, 1.9%. A lot of ag on the top five. Seems like, other week we probably would have spent a lot of time on the ags. This week, unfortunately, trade wars and all things indices and others seems to take precedence, unfortunately. Lumber on the downside, about 6.5%. Number two, lean hogs, 5.8%. Our old friend lean hogs. Number three, palladium, about off nearly 5%. Tied pretty close to it, 0.01% difference with the RBOB. Actually, no, the yen, Nikkei yen. Doing off about 5%, and followed by RBOB down on the dark side. So those are the bottom five and the top five. Now let's see, speaking of top and bottom five, let's see what you guys have in store for us with a little bit of your futures, options, feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/theoptionsinsider, stocktwits.com/optionsinsider, or via questions@theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live every Friday at 3 p.m. Central via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's Mixlr.com.
All right, everybody, welcome to your feedback. Also, sometimes we take some time to give you guys a little bit of feedback and ideas. We're going to do that right now, actually, with something Nick was just showing me. I've kind of been playing around a little bit. Kind of hard to play around with it too much during the show because I have a show to host, but it does seem pretty cool. This is the strategy simulator that they're putting together over there at CME. I'm guessing, Nick, you and your team had a little bit of a hand in this, probably one of your babies. So why don't I let you kind of walk us through? This is a pretty cool. You can share the lead us, tweeted out the link if you haven't seen it. Listeners, we'll put it out there. Probably put it in the show chat for you too. Nick, walk us through what is this thing and what can we do with it?
Okay, yeah. So it is a tool that we created for CME, and it's sort of a simplified version of our big strategy building tool that we have within the main version of QuickStrike. And this one is meant to be simplified. It's a single contract, meaning you could pick from any one of the benchmark products that the CME has, and then you pick you go through the asset class, you pick the product, and then you pick the expiration you would like to play with, and it will essentially, you could build a trade, any number of legs, see what that looks like from an expected return, from a theoretical value standpoint in charts. You can also see the Greek charts. And then the nice thing about it is you can take that trade and you can simulate that trade. So basically you can go to another tab and then say, all right, tell me what this trade looks like if futures rally really quickly or rally kind of quickly or don't, or the market's flat or the market goes down slowly or down very quickly. So that's the idea, strategy simulator. So you could build a trade. You can even cover that trade with futures, see how it works. You can also take that contract, that whatever trade that you create, and then you could duplicate that same trade, maybe tweak it a little bit, and then compare the strategies against each other in the simulator itself. So again, that's the simple version that's out there on the CME website. It's meant to introduce people to the options market, give a little bit of a taste into the bigger and better tool that's available within the subscription version of QuickStrike, where you can go in there and you can do calendar spreads, and you can see the calendar spread against the spread itself and see how that theoretical value changes over time. You can manipulate the futures vol into days to expiration to see all that kind of thing. You can do a little bit of that in this tool as well. It's meant to get people started. But the nice thing is it shows you all the expirations that exist for the given product, and you can build a spread in any one of those and play with it and see what it looks like. And it's pretty nice. I think people are gonna like it, and it's been our trade builder inside QuickStrike has always been a pretty popular tool. This is pretty much a rebuild of that, but this is sort of the base version. And the other nice thing too is that this one includes the ability to, if you manage physical or hedge physical, it lets you include a physical and then start to see how your hedge will affect your physical price if you're a buyer or seller of that as well. So I encourage people to get out there, take a look at it, and give it a try. If you have any questions, shoot us a note on Twitter or shoot us a note over from the website.
Yeah, check it out. It's actually pretty cool. I like this kind of stuff, Nick, because we see a lot of this kind of stuff offered by the brokers on the equity and index option side. For whatever reason, the futures options side of the world has always seemed to lag behind from functionality and the tech perspective, quite frankly. We get questions all the time on this show. Why can't I do this? Where can I go to do that? So I like seeing, quite frankly, maybe the exchange is starting to come up as an intermediary. Obviously relying on your tech to do it, but actually being able to provide some of that functionality. If they can't get it elsewhere, they're not happy with the tools, they can go find it for themselves. Free. Gotta like that cost. Head on over to cmegroup.com. I think, I'm not sure if it's an obvious link. We put the link out in the chat. We'll put it in our show notes. We tweeted it out as well if you want the direct link, or just search for CME Group Strategy Simulator. You'll get to this landing page. You got to fill out a little info to get it. Just a couple of things, your name and what you do, that kind of stuff. But once you do all that stuff, you get access to the simulator, and so far from what I've seen, it's pretty cool stuff. So if you're one of those ones who's been writing into us saying, where can I get X tool, or where can I get Y thing, where can I kind of model some stuff in the futures options realm, here you go. Kick the tires. Not going to cost you a cent. Good stuff. All right, we got a bunch of feedback from you guys. From last week's show, MJobain. Tell Erik Norland, he's referring to, of course, our guest from last week, the senior economist over there at CME. He talked about a lot of research on a lot of different products. MJobain saying, tell Erik he needs to do some research on Bitcoin volatility. Well, I did mention that to him, if you recall, at the end of the show. I said, we need to get some reports coming out of you guys about Bitcoin. He seemed pretty open to that idea, so I'm guessing we will be seeing that soon. We just gave you the vol number right now, so maybe that'll appease you for another week. Remember that, 106. Put that in your pipe and smoke it there, Mr. and Mrs. MJobain. So yeah, but I did pass that along to Erik already. So your concerns have been noted. Another comment here, Lewis J said, "Good show." Well, thank you, Lewis. I caught it on podcast. That's where most people get it. Checked out the VIX. Oh, he's talking about what we talked about at the end. I checked out the VIX yield curve chart on the CME website. I have to admit that looks like nonsense to me. Yeah, we shared this one with our audience afterwards out on Twitter and stuff. And some people, I think it was a Bear Bull, agreed with you at 42. He sent in a great picture because I asked, I said, is this like a good correlation chart or is it more like the scribbles of a toddler? And he sent in a great image of a little girl just scribbling on a piece of paper, which kind of made me chuckle. So a lot of people are with you. I mentioned that to Erik as well. It is an interesting correlation, not one we see brought up very often, VIX and the yield curve. And when you see it plotted out like that, it's, shall we say, strange, but it's certainly made for interesting fodder on the show. I'm glad you guys could get a chuckle out of it, if nothing else. Mr. Nick, Miss Guy Scott wrote in last week asking which products are closest to the 52-week highs. You said you're going to put something out there. Should we retweet it out there for him? Did we ever get it out there? That 52-week high is an implied volatility.
Let me get that out there this weekend. Let me do that.
Cool. Our listeners are a persistent bunch, sir. They want us to do their homework for them. But we're happy. We're nice here on the show. We'll
52-week high volatility. All right, I'll have to take a look at that and see what we have.
I
will look at all the benchmarks and I'll put a. You know what I'll do? I'll have to take a look at. We have a report for the quick skew in terms of 52-week high and low and stuff like that. I'll see if I can generate one for an at the money too. I've been meaning to put that together, so I'll see what I can do.
Here's one for you, Nick. I guess I'm chopped liver here. Phil Bremer wants to know. He's asking you to weigh in on a topic that's been kind of a big debate point on our network for the better part of the last month. He says, does Nick have any thoughts on the inverse volatility craziness? Of course, he's talking about all of these products, most of them linked to the S&P volatility, most of them short or inverse the S&P volatility, and a lot of them having come under fire, several of them, or one of them getting effectively shut down, another kind of getting its wings clipped a bit over the past week. I'm sure you've been following this, Nick. Do you have any thoughts on this for our friend Phil? I've waited on this a million times, so I'm good, but you can weigh in if you like.
Yeah, I mean, other than do I have any specific thoughts about that as a product? I personally don't see an issue as having it as a product. I think like anything else that we've seen in the markets is there was so much stagnation in terms of any movement that the volatility got to a point where people just got out of hand with it. Just like we see a lot of times. And you could say that the Bitcoin rally was a little bit out of hand because, there was a little bit of irrational exuberance coming off the holiday, Thanksgiving and Christmas and everybody talking about it. So I'm sure that had something to do with that. But same thing here, I don't think people want to do a lot of homework when it comes to investment opportunities or investment ideas. So they hear about something and it's easy enough to get involved now that, this thing probably just got people who didn't know, although when we see who went out of business with it, there obviously were people who thought they knew what they were doing. But, I think, what is it? Pigs get fat and hogs get slaughtered, right? I think that was the situation in this case. I don't see a problem with the product itself. In fact, it's, having structured products that allow people to take contrarian viewpoints. I don't think there's anything wrong with that. It's just a matter of not getting caught in any situation where you just think that it can't go in the other direction because it always can.
Yeah, we got, let's see, got a bunch more here. We got in the chat here, we got Option Queen asking something we talked about before, I think on the show, probably we were talking about it again earlier in the show, asking how closely do Emini and SPY and SPX skews track each other? We said this before, the big indices are probably one of the better examples of these products really kind of moving in lockstep from a skew perspective. You're going to get little aberrations here and there. A trade goes up in one product, may distort, 1 month versus the others slightly. But if it's anything really material, you're going to see, those big funds come in and arbit to death pretty quickly. It used to take matter of probably 10, 15 minutes for these things really to line up back when we were arbing between the SPX pit on the SIBO and the big S&P options pit on the CME, because of course you had to have clerks and human intermediaries there. You see a big order go in one pit, and even if the order didn't follow in the other pit, you see people adjust their volatility skews accordingly, because of course they were all trading the same stuff at the end of the day, and it's a similar scenario here. But big trade goes up in, let's say, I don't know, the downside puts in month X in SPY or SPX or Emini, take your pick. It's going to be reflected in the others because they're all trading. They can't give that vol away for free. Get it expensive in one product and then cheap in another. It doesn't really work that way. So yeah, they tend to move pretty closely locked to each other for a lot of reasons you might assume. Patricky asking, any more research notes for the show? I don't know what he's, maybe from Erik. I don't know. Maybe he wants more research. Which case we just loaded you up last week, Patricky. I don't know if we have any more to come for you for anytime soon. I think the folks at CME may be tapped out for a while. I think we hit it all. If you have any particular research you're looking for, hit us up. We'll be happy to oblige. But in general research, I think we gave you a mother load last week, so we're going to give you a break this week. Nick, more people asking us for homework. Revert asking here, what's the historical average for Nat Gas skew? Is it typically bid to the calls? This is a product we've talked about a few times on the show recently. We had a big move in Nat Gas not too long ago, about a little over a month ago. We brought it on the show then to talk about it a lot. I haven't really analyzed it a lot since then. Do you have anything quick at hand at Quick Strike that we can use to answer our friend here, Mr. Revert, Mr. Nick?
Yeah, well, so what I could pull up here is I can pull up the quick skew tool, and I can take a look. Let's look at a couple years instead of just one. Let me see what we get here. All right, so if I'm looking at the 30-day quick skew. So, right, that's going to tell me richness and cheapness of the 25 delta or whatever delta call and put to the at the money. And I'll tweet this chart out as well. Historical average for the 25 delta call is about 1.5%, and for the put, it's about negative 0.25%. So, and I think you'll find this chart interesting. It's pretty consistently. Well, it depends on this is a very weather-oriented product, right? So let me go back a little bit further so I can get another season in here, and I'll let you guys decide for yourself. And what you're going to see in here is you'll see the 15. I'll pull that one off. I can do number of delta. I'll just do the 25 delta. We saw a really big skew, obviously, when we had this big run-up in futures that Mark just mentioned. And then after that, you see things kind of flip back and forth, but a lot of the time is spent very tight to the at the money for both the calls and the puts, and I think it just becomes a seasonal thing when we get these weather scares and that kind of stuff, where you're going to see the skews get a little bit out of hand. But historically, it's around 1% each that they're rich or cheap to the at the money, but you're going to see the chart, and it does vary quite a bit depending on the season that we're talking about. So, yeah, I guess if you had unlimited resources and you could just bet that it was always going to go back to where it was, to the average, you can do it. But you're going to have some pain points here, as you'll see when this thing goes out, and I'll do it right now. And this is the 30-day constant maturity, okay? So that's what I got, and I think if you take a look at the Twitter, Mark will retweet this as well, and it should be answering your questions.
There you go. See, ask and you shall receive here on the old TWIFO program. By the way, you guys can do this when we're off the air, too. Head on over to cmegroup.com/TWIFO. You can do a lot of these scans and stuff for yourself. And spoiler alert, as Nick mentioned at the top of the show, sometimes he forgets to turn off all the live links, so you get a whole week's worth of access to really good stuff. Usually that's limited to just for the show, but once in a while they get a little forgetful over there, which works out for you, which is a good thing. You get to check out the tools in even more detail. Let's see, we got a couple more here, but they're kind of lengthy. I don't know if we have time for all these people asking about the comparative cost of calls in the metals versus the puts in the indices. Obviously, we got to do a little analysis on that one and a few others here. So unfortunately, the music's going to tell us that we're pretty much done. Great questions, everybody. Keep them coming. We'd love to hear from you guys. We respond to everybody, read them all, even if you don't get a chance to answer them all on the show. We'll get to more of these next week. Keep it surprising, Nick. Last couple of weeks, it's actually been pretty light on the Bitcoin, which is interesting in terms of people usually towards the end of last year, you couldn't escape. 90% of the questions were Bitcoin this, Bitcoin that. Maybe showing a little bit of a change of interest for people. When the market's moving, the broad indices are moving, maybe a lot of them don't have time for the crypto as much as perhaps they did back when, volatility was in the single digits and nothing was really happening on the index front. Again, like I mentioned, you want to follow along with all this cool stuff, cmegroup.com/TWIFO, easiest place to do all of that. Check out the Strategy Simulator while you're there. Just search for the Strategy Simulator. Maybe you find a tab for it or follow that link we sent out there. It's really cool stuff. And Mr. Nick, before we roll on out of here, you got the Strategy Simulator. You guys are kind of like the one-man band making all the cool tools for CME. What else you guys got cooking up your sleeve?
Well, just to follow up on the Nat Gas question, everybody can go and see 30 days worth of historical volatility as well as consummatory volatilities for free by registering for the Quick Strike Essentials tool on the CME Group website. That's our free version. If you want more history, meaning longer dates, and a few more report options, you'll have to take a look at the subscriptions that we have available. We have anywhere from 1 year in the professional all the way to 7 years worth of information in the big enterprise version of our Quick Vol tool. So that's the first thing. As far as what's coming down the pike, I think that there'll be some good tools that are going to be, again, more free tools that are going to be available coming to the CME Group website very soon. And especially if you're new to the markets, you're going to have real easy access to which expirations are available for a given product. And also, Mark, there's going to be a tool out there that will not only let you see the expiration calendar, but it will feather in the economic numbers as part of that calendar as well, so people will go and see which contracts expire on which days where there's information coming out in the market. So stay tuned for that stuff. And again, more coming in the big regular Quick Strike subscription. Again, if you have any Bitcoin questions or you're looking for more formalized volatility information, let me know. I can point you in the right direction there, as we have a relationship with somebody where we're getting the information and then creating those numbers for them. So just shoot us a note. I'm glad to help you out.
Hit them up over there. They actually are the ones with some of the good Bitcoin data. A lot of you are still into that stuff. Hit them up or find them on Twitter at QuickStrike1, QUIK, no C, STRIKE1. By the way, speaking of Twitter, I'm looking at that chart you just tweeted out, and we retweeted for you. Interesting stuff about the Nat Gas. It did get a little funky out there, the skew, over the past month when we had that big move out there. So all you ask this kind of stuff, you can generate these reports for yourself and kick the tires, as they say. Head on over to Bantix, BANTIX.com. You can do so for yourself. And on behalf of Nick and our friends over there at CME, and indeed myself, I want to thank all of you out there in the listening audience for downloading, streaming, subscribing, for sending questions about everything under the sun. That's why we like this show. You guys ask about everything. Kind of keeps us on our toes, which is always fun. And we'll see you next week for more of This Week in Futures Options.
This Week in Futures Options is brought to you by Quick Strike, options pricing and analysis software. Quick Strike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. Quick Strike has you covered, with market data reports ranging from open interest to the term structure of volatility. Quick Strike is the perfect addition to your trading toolkit. Learn more about Quick Strike at Bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1. This Week in Futures Options is also brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.